The average lifespan for South Africans has increased due to improved medical care, and retiring at the age of 55 could have dire financial consequences for many, as they are likely to live longer. Retiring early also means that you will not benefit from compound interest that you are likely to accumulate up to the age of 65.
When you're building up your capital towards retirement, your compounding effect is more powerful towards the end of that period. So if you're working for 30 years, you could find that all the capital that you've built up in 25 years, you can literally double that in the last 5 years because of compounding and income growth and all of that.
Many pensioners derive income from their savings, and in a low-interest environment, the returns on investments are low. Pensioners are also battling to cope with the escalating cost of electricity, water, food and medical expenses. Medical inflation has increased by 2% per year, more than the inflation rate.
Well, with medical aid, it's on average increased about 2% higher than inflation. And I think that's going to even shoot up because our inflation rate is very low at this point in time, but the medical aid costs have not really gone down. So you need to provide additional savings for medical aid if you would like to continue with medical aid. It's going to be almost impossible to get new medical aid. If you start and you have not had medical aid before, there's going to be exclusion periods, waiting periods, additional costs, etc., etc. And what happens very often is at retirement, you have to look and see what can you afford, because it's not possible to have a fantastic medical aid, but you don't have enough money to pay your rates and taxes and to eat properly.
Using your retirement money to start a new venture or buy into a franchise could backfire, especially during these times of uncertainty when many businesses are struggling to stay afloat. If you can't resist the temptation to be your own boss, rather do your homework and start a business that does not require a lot of working capital.
Businesses generally have a high failure rate. And so for somebody starting out a business at the age of 60 or 55 or 65, whatever the case may be, the odds are stacked against you that you can make it work. And, it's happening at a time where you can least afford any setbacks.
If you are considering early retirement, ensure that all your debt is paid up, especially unsecured debt such as credit card and personal loans. You need to also settle your car and home loan to avoid repossessions.
So if you are in a position when you get to normal retirement or early retirement, you need to settle your debt, because if you don't have your house paid off, you can default on those house payments and you can lose the roof over your head, the one asset that you've been trying to save for retirement. So it's very, very crucial that you look at settling debt, clean up credit cards, clean up shop cards, etc., etc. Make sure that your car is paid off by the time that you get to retirement.
When you retire, the first 500,000 rand is non-taxable provided you haven't made other withdrawals over the years.
South Africa has been undertaking retirement reforms in the past few years. It's been probably the last 9 or 10 years that the retirement reform process has been underway. One of the last actions was kind of harmonizing pension and provident funds. So if you're a member of a provident fund, what you had in a provident fund before that harmonization process, you can withdraw all of that out still. That withdrawal will be subject to the retirement tax table, where the first 500,000 is tax-free. But that's provided you haven't made other lump sum withdrawals that were taxed according to that table.
Analysts agree that taking early retirement should be a last resort, especially during these tough economic times. If you want to retire comfortably, you should work until you reach retirement age, have a budget and stick to it. The means test legislation still applies, and that means that if you have other means of income, you might be excluded from receiving an old age pension. Naledi Matlapeng, SABC News, Johannesburg.